All right, all right, all right. Okay, okay, okay. Mhm. And welcome, 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 ladies and gentlemen, to Coffee with Greg. This is we are on school. I'm not comfortable with the okay. Okay, we're gonna get started. Happy Friday to all you guys. And there we go. Okay, we're going to get started. I'm just going to put this on here. We have some things. Okay, we're going to put this out here. All right. And welcome to Coffee with Greg. This is Dr. My name is Dr. Greg McLeod of Elite Traders University. Welcome to our Q&A, our Forex Q&A. It's going to be fantastic. I hope you guys had a great week. It's time for the weekend, time to get your last burning questions out of the market. I just scored about 3 pips scalp on the euro, and I'm going to share my screen and show you what we're doing. We're also taking questions here on Zoom, and also I want to give a big greeting out to my my YouTubers out there. And I know that if we do school, we can't do YouTube at the same time. And I wanted to make this an outreach so you can actually my eyes go crazy. See, so we can actually reach out to our big greater audience out there on YouTube. So that's why they changed the link, but we are going to continue to use Zoom for the foreseeable future, so we can reach out to the YouTube people. We're going to reach out to our also reach out to our Facebook people. Okay, and we can do that from here, right? I know eventually you guys want to sign up for school, which is great, right? In fact, let me create a post here. Join me now for coffee with Dr. Greg. Uh, this is our Forex Q&A. So if you have any questions, burning questions about the market, about what's going on, as far as the interest rate, we had some interest rate announcements. We had the Fed cut rates 25 basis points, and we also had the Bank of England. They left rates unchanged. We had the Bank of Japan as well. So a lot of big central bank meetings. We see the big dislocation in the market, right? And so we've seen some big impactful moves. The market was like waiting for these big currency, these big central bank announcements. Central banks announcements are one of the biggest drivers of currency movements, right? And so when we see those types of dislocations in the market, they provide trading opportunities. We need volatility. When we get that volatility, it's like wind in our sails, the news, right? That's why I love using the economic calendar. If you go to mymarketheatmap.com, there's a free economic calendar there, as well as one of our powerful heat maps. But just being able to keep an eye on the economics, on the different economic announcements, and the different things, I call them fundamentals. We look at we look at GDP, which is gross domestic product. What is the healthy economy of a country? So even though there might not be a direct correlation right away, um, people are watching those reports, right? Just like if you watch Trading Places, you can see the impact of the news and how Eddie Murphy and Dan Aykroyd, they spent the whole movie trying to get the crop report. And once they got the crop report, they had the information, right? Gordon Gekko says it in Wall Street best, right? The most valuable commodity I know is information. Wouldn't you agree? Read Sun Tzu, The Art of War. Every battle is won before it's ever fought, right? So information is very important. And a lot of people, they look at one piece of information. They're looking at price action, and they think that all price action is going to tell them everything they need to know. Now, given price action will tell you a great deal about the market. It's like you're a doctor. As a trader, you're a doctor, and you're actually going to your patient, the market, and you're saying, "How are you feeling today, Mr. Market? Are you feeling sick? Are you feeling happy? Are you feeling sad? What's bothering you? What's worrying you? What are you concerned about? Oh, or you got tariff flu, or you've got, or you've got inflationitis, right? Or maybe you have unemployment, maybe right? Yeah. So the market is fixated on certain things. And so, and those announcements come out at certain times, and at certain times it creates more liquidity or more volatility, right? The market moves from low volatility compression to high volatility expansion. So the market is constantly inhaling and exhaling, inhaling and exhaling, right? So inhaling, exhaling, right? You got it in reverse there. So our job is to find when it's inhaling, position ourselves, and ride the exhale, right? So that is what we do as traders. That's where timing comes in, right? So if we don't know or not aware at 8:30 a.m., there's two news cycles in the U.S. market. There's the 8:30 a.m. New York news cycle, which we just had, and we have an economic calendar, and then you can see with the different different announcements. And I look at only the high impact ones, the ones that will move the market 20, 30, 40 pips, right? And there's some minor ones that are not as impactful, but they are still they can move the market, right? We had a lot of UK data today. So in fact, let me go ahead and share my screen and let you see what's going on. And if you have any questions, you go ahead and post them in the chat box. And again, you're with Coffee with Greg. My name is Dr. Greg McLeod. I'm a former Wall Street currency strategist, currency analyst for one of the world's largest forex broker dealers in the world. 30 years in the markets, and I have taught thousands of traders around the world using my proprietary system. I used to work at a top-tier bank, and I've also worked for several brokerages and have advised several brokerages as well. And so right now, my mission is to help traders become professional traders in 90 days or less using our proprietary Pip and Run strategy. It's a strategy you're not going to find anywhere else in the market because, we keep it close. We don't, we make our traders sign a non-disclosure, non-compete, an NDA to protect the strategy, because our strategy is our edge, and we're not going to give our edge away willy-nilly on the YouTube, right? That's why 90% of all traders lose. 90% of them are looking at YouTube. I know you're looking at me on YouTube, but they're looking at people who have never ever worked at a New York office, trading brokerage, never worked on the exchange floor, and really, they learned, from YouTube, right? So many people trust me because I help them get results, because I worked for the big banks. I worked for the institutions. I worked for the bad guys. So I know exactly what they do and how they do it. And so if you are willing to make the investment in time and resources, then book a call with me. Anyway, let me go ahead and share this screen with you. And Get to it, Greg. Let's do it for Friday. And we're going to look at the economic calendar. No, sharing is caring. 3, share. Right? Why are we over here? Ooh, share. There we go. So this is my market heat map. Is an arrangement of currency pairs by percentage change. It tells us what's hopping, what's popping, what's dropping, and what's not in the market. You go to mymarketheatmap.com for free resources. You can access to one of 6 powerful heat maps. And this is the one that's currently up. This is the Forex majors. In fact, the most of the volume, about 85% of all Forex volume is traded on the majors. And so I give you that heat map for free. We have one for commodities. We have one for crypto. We have one for indices. We have one for global stocks. So we have these heat maps available for you. Now, right now is the green is uptrend, red is the downtrend, and gray kind of stay away, is moving sideways. We can see the dollar Swiss and dollar index are up a third of a percent. Dollar yen was down, but we actually we were able to take that. The low is 47.20. We were in it to win it, and we were able to cash out on our dollar yen trade. But also, not only do you get a heat map, one of 6 powerful heat maps, you also get the economic calendar. They might have to kickstart the economic calendar. If it doesn't show up, just refresh the screen and press show more, right? See, it might be compressed. Click show more, and it'll expand, right? So we can see at Friday, there's also, I told you about the 8:30 and 10 a.m. US news cycles, but other countries have their own news cycles, and the UK has their news cycle at 2 a.m., and they had retail sales month on month. And then we have retail sales year on year, retail sales ex food fuel month on month, volatile. They take fuel out of the retail sales because the price swings, can make the it's very volatile. So look, retail sales month on month 0.5. They expected 0.3, so it's better than expected. Usually that's good for the currency. But we were probably popping up, going up in the north, going counter trend. But the trend has been kind of down. You see retail sales 0.8 without the fuel, year on year 0.7. So retail sales higher than expected. That's the green. And then we also had Canada retail sales better than expected as well, right? And retail sales ex autos month on month was down in Canada, and then we had some, so that's going on right here, right? So we can look at the currencies that were in play, and you can see that even though we had some good data, retail sales out of the UK, it did not benefit the currency over the long run. We might have seen a pop in the currency, might have seen a little bit of a blip to the north side, and that gave us a rally. But basically, we're seeing the dollar index take, with we're seeing the U.S. taking in more. They're taking in more tariff revenue, right? The Americans getting their fiscal house together. I know there's a looming debt crisis on its way, where the House Democrats and the House Republicans may actually, if they'll come up with a budget, then they're going to have a government shutdown, and we don't want government shutdowns. Shutdowns are not very good, not very nice, right? People get laid off. Remove drawings. Okay. So this is the US dollar index. This is a basket of currencies versus the US dollar. I like starting with the US dollar analysis, because once you understand where the dollar is going, then you understand where the other currencies are going, because the dollar is the reserve currency of the world. And so understanding that the dollar is Aussie versus the US dollar, Bitcoin versus dollar, gold versus dollar, euro versus dollar, right? New Zealand dollar versus dollar, Aussie dollar versus dollar. Then the other way around, we have dollar versus yen and dollar versus CAD and dollar. Get the picture? There's a lot of dollars involved here, right? So this is the US dollar index. So we can see that, after hitting a high of 110 back in June 2025, or actually, sorry, January 2025, we've just been in a sled ride straight down, right? The value of the dollar has been decreasing, right? And this is a result of a number of things, right? We had interest rate picture, number of things, tariffs, everything, flipping things around. However, something significant has just happened. We have something called a double bottom pattern. Double bottom pattern is a powerful pattern because we have a low that was put in at the 9622 area that was put in back in July 1st, 2025. The same low was tested September 17th, 2025. So about 2 days ago. So this is a powerful pattern. It's one of the 6 Pip and Run patterns that we use. And we use this pattern to make a great deal of money, right? So that's price. Basically, the bears were in control. They were pushing price down to a low. The buyers stepped in, and the bears, one more time, their goal is to push prices lower, right? They want to push it down to the 95 or 94 area, right? But then they were rejected at this dotted line. They were rejected. So now, and this is a daily chart. So a daily double bottom is one of the most powerful chart patterns in technical analysis. This is a major change in the market. Every time prices have tried to make a bottom, it dropped. It made a bottom, it dropped. It made a bottom and dropped. Now it actually had we had this move here, right? So this is I got an alarm going off there. Euro dollar 117.43. It's kind of like oscillating. We'll take a look at that later on. But this is a very extremely powerful pattern called a double bottom. And with this double bottom, we can see prices move much higher over time, right? Since this is a daily chart, you say, Greg, you're a short-term scalper. Why are you looking at this really big time frame? It's because things start off in the tide. There's a market tide. There is a market. There's an underlying market tide. I always talk. I teach our mentorship group. Always tell you want to look at price in multiple dimensions, right? You want to look at the tide. You want to look at the wave, and you want to be able to identify the ripples against the wave, right? So we've got this tide with the primary trend, which can last several years, right? The market tide, right? That moves in one direction. Then you have the waves, the secondary trend, which may last weeks, months, and can retrace some of the primary trend, right? And then you have the ripples, the minor movements that are day-to-day market fluctuations, which is where I live. That's where I make my bread and butter on the ripples, right? Not drinking Ripple. This is not Sanford and Son. Gotta get some Ripple, which is a cheap drink that was sold at liquor stores in urban areas long back in the 70s. But anyway, Ripples. Or XRP. That's the more Ripple. So there we go. So market fluctuations against the tide, right? So this here is and this is why you watch this stuff. That's why you watch me, because I'm going to tell you, this is our tide. This was our downtrend for a long period of time, right? For most of 2025, and now we are starting to move on up, like Jordan and Weezy, right? Moving on up, right? So well, it's 3-day movement, right? It's 3. And then we have a trend line break. We could draw a trend line. We don't have the break yet, but we're coming very close to this trend line break, right? And then our typical first target for the dollar index would be the old high of 113. That was a high we saw back on August 1st, 2025. So we get a break there, we could see a move there. Okay. Now you're like, well, Greg, this is great. How can you can't trade the dollar index. So why are you showing us this if you can't trade it? Well, we use the index as an indicator, right? If we know that the dollar is going up, we know that Aussie's going down, Aussie USD, DXY is the same as USD, right? So we could get long dollar yen, long dollar CAD. We can go short Aussie, short euro, right? In fact, let's take a look at the euro since the euro is considered the anti-dollar, right? So if this is going up, the euro should be going down, right? So let's take a look at the euro. Okay, and let me go and get rid of some of these lines, drawings, right? So here's the daily of the euro, and we can see that we have been moving up, right? But this is a kind of a bearish correction, an ABC correction that came to some Fibonacci math, sacred math kind of thing there, right? And we really moved. This is our equal wave pattern, which is a extremely bearish pattern. You say, oh, it's bullish because it's making higher highs. Like, no, they tell you this. This is pattern 222. H.M. Gartley wrote a book, and in that book, he talked about the AB equals CD or equal wave pattern. Back in the 1930s, he charged the equivalent of $15,000 to teach people this very powerful pattern. This pattern looks bullish, right? Higher highs, higher lows. Your structure people will get this all wrong. Well, I follow structure, market structure this, right? This thing hit the 100% expansion at 119.37. That is bearish. It's a bearish Gartley. You can look in the Gartley patterns here, the AB equals CD, where we have equal wave, AB, CD, right? And if you take a look at the ABCD pattern, the equal wave, and so there's a couple of them right there. There's where you have AB equals CD, and that usually is our reversal. This is a bearish Gartley. The one going down is a bullish Gartley, right? I believe I have some more Gartley patterns there. The AB equals CD. Yeah, this is the bearish ABCD, right? And that's your sell zone. So we are exactly, the diagram is the same, right? I just look at patterns. As traders, we're pattern recognition creatures, right? And so there are a couple of things too. There's a Fibonacci expansion, the 100% expansion, the AB equals CD, right? There's also going out to, we can take fibs from the last recent high that we had back in 2018. We can take a fib from there down to our low, and we can see that we are the 786 from the downtrend is also in the same area, in this 19.1900 area. So you have a confluence layer. Let's say if you're a defense attorney, you want to build a case, right? Or a prosecution attorney, you want to build a case against the accused, right? So you have the glove and the fingerprints, and you have eyewitness testimony, and you have hairs and blood and all these things that make a solid case if someone is guilty or innocent, right? Well, as traders, we are like that attorney. We're building a case, looking at the evidence. We build the bearish case that we've got a Gartley. We're coming at a fib resistance level. We're got a projection that leads us to 100%. We have an AB equals CD, a bearish Gartley pattern, right? We also have the US dollar index looking bullish, right? Which is the anti-dollar. So with all these things combined, we're building a bearish case for, like we can't willy-nilly like just jump into this thing. We want to drop down to lower time frames, and we can see that we're starting, but it doesn't go in a straight line, right? We look at 2 hour, 1 hour, and we can see that we are right. We're in starting a downtrend channel from the right, and we probably have some bumps along the way where price will probably rally and right. So this is our 3 minute or 1 minute, then we get down to the 15-second, right? We just kind of like we're looking at this, you know, what if we were to right, you know, we could probably scalp that short. It's kind of late, but 42 down to 37 would be something to scalp, right? Yeah, right, because we're in a downtrend, so and we're below the 200, so we're bearish, right? So other currencies are doing the same thing. If you look at Aussie dollar daily, right? Because they're going to follow the dollar is the big dog, the euro is the other big dog, and the other currencies follow whatever dog. They're going to follow up or down, right? And so we have you know, the Aussies is following down as well. Topping out close to the whole number round number resistance 0.6700, right? There's a daily, look at a weekly, and weekly we're in a huge downtrend, and we've rallied against right 1, 2, 3, 4, right? So we've got a really good low risk opportunity. If you're actually a position or a swing trader, this would be a great short from here. Not that that's not a trade recommendation, but just something I would look at is try to sell as close to resistance as possible, because that will give us the lowest amount of risk, more bang for our buck, right? And I would look for even a retest of the low. That'll be a 7.35 risk to reward on that. Looking for, as price starts to work its way down, right? And then all that time we'll probably earn positive carry because the dollar interest rate is higher than the Australian interest rate. So you can actually get paid for holding this on the way down. I would just keep it real small, like a 1K lot or 2K lot, because, the average daily range of these currency pairs is about 100 pips. And 100 pips on 10 cents a pip isn't going to get you into a lot of trouble. And then as it starts moving in that direction, we can start adding, at every scale, there's scaling points, which we teach in Pip and Run. We added scaling points. In fact, yeah, we were doing a class on scaling points where we can maximize, where somebody will take one trade and they'll make like, oh, look, we made one trade and we made some money. It's like, yeah, but from that same distance, I might have taken 20 or 30 trades and made multiple times. I have a powerful setup that is a powerful high probability setup. Why take one punch when you can take multiple punches, right? If you got the guy on the ground, like ground and pound, then why wouldn't you just keep pounding until they call the referee to pull you off, right? That's that's how I play it, right? I like they say, well, you're increasing, you're making more spreads and commissions. It's like, yeah, but I'm also making money too, right? So bite me. Right. So yeah, so this is yeah. So during Asian session, we took a hit there for 10 grand, but I hit it right after that. 2010, I flipped that. 2016, 18, 2016, hit it for 1215, 1755, 1012, 5401, 2700, 76,000. This is now we were underwater probably close to 50,000 on this dollar yen. But one of my fellow students, a great student named Steve Allen, and I'm like looking at him like, oh, I'm going to cut this right now. And he goes, what's your count, Greg? What's your count? Take a look at the 15-minute chart. So I took a look at the 15-minute chart. I go, oh, man, this thing's going to go to Pluto. He goes, yeah, I'm holding, right? So we teach a wave counting class. The wave counting class is an internal class that we have for Pip and runners to really refine their entry strategy. It's not open to the general public, but we have private classes that go deeper, dive into our Pip and Run strategy, and then we have general classes that if you just took a general class, you probably become a much better trader by far, because what I'm teaching is institutional, bank type stuff, right? So there we go. So these are great setups because they're all pretty much going to go in the same direction. Aussie's going to drop, Kiwi dollar. Interesting. The Kiwi is a little bit different. Why? Because it made a failure swing. We have a low, a high, a low. Unless we break this low, this thing goes higher. I don't know what's going on in New Zealand. I need to ask Nanette or David or Sarbit what's going on with this with the Kiwi. It looks interesting. Look, we have a double bottom here, and we actually should see a maybe a spike up to maybe at least the old high, right? But you want to see a break at 57.96. This isn't as bearish as the others, right? And sometimes you'll find there's individual things in the market, maybe in interest rates or some type of special export deal that maybe New Zealand has with China that's going to bring billions of dollars. I don't know. I'm just guessing. I'm just making that up. But sometimes when you say, well, I mean, because basically Forex is pretty easy, guys. It's easy for me because I've been doing this for 30 years, and I see that, oh, this is going to happen next. And if you watch the videos, it looks like I'm editing and talking over it. Saying, no, I'm in real time calling this out. I'm calling out that I want to go long. I'm calling out I want to go short, right? And then I go short, and then it hits the target. And like I said, rarely do I lose, right? Right. And I call losses are just like when you're I don't want to use this example because of all the stuff going on, but if you are a marksman, I'll use that term, marksman, and if you miss, they call it DOPE, DOPE, or data up on previous encounter, right? So you miss, then you adjust for wind speed, wind, or the arc of the gun, adjust sights, do a bunch of things. So we take our shot in trading, and when we miss, a lot of people don't love their losses. They think, they take it personally, but all losses is feedback, right? It's just feedback. My $10,000 loss told me I'm going in the wrong direction. Hey, Greg, hello? Anybody up there? Wake up. Short dollar yen is not the play. Oh, so 20, so 8, 20 at the 8:10 p.m. I go, So at 8:16, what did I do? I got long. At 8:22, I got long. At 8:25, I got long. At 8:27, I got long, got out. Got long and got out, right? So I'm getting in and out of these trades in like 3 or 4 minutes. Why? I'm trying to make up for this loss, right? But because of this loss, ideally you want to keep your losses small. That way, when you start making the comeback, you don't have to this is different than revenge trading. And some people ask me, what's the difference between revenge trading and actually taking in the data from your loss, processing it, and using it to your advantage, right? Pimp your pain. Take your loss and turn your shit into flowers, right? Your manure you take that bulk and you make it into flowers, right? So when you get something that negative, you don't shut down, go in fetal position, suck your thumb, start crying, start cussing, start throwing banging on the keyboard. You remain calm, you remain cool. Okay, what is this telling me? What are you telling me? You're going in the wrong direction. Now, this one here was and long. It was early. And actually, like what happened was I was long and then it started going against me. But I didn't stick to because I had longs before, right? I just kind of got shaken out. I said, this thing is probably gonna. I said, it, I didn't want to lose any more money, so I kept my stop tight. Here, I I went in the opposite direction, and so sometimes you get a little bit of you might get a little indecisive there, and you got to take a break and look at price action and see. Let your equity curve tell you too. If your equity curve is going screwy, then you probably got something going wrong in your trading, right? You need to pull up your sheet and you go, okay, what's going on here, right? Why did I even do that? Go back to your chart and say, okay, what was going on? This is I can show you. I'll show you what an activity or process I use when I get, if you get a lot of losses, maybe you just need help. You need to enroll in Elite Traders University. You need DM me, Greg. I need your help. I need to enroll. I don't know crap. I keep losing money. I might as well give the money to you. At least I'm going to learn something. And I like you. And you've been around for 30 years. You work for the banks, the brokerage, the institutions. So I want to learn from you and stop giving my money to the market, right? Now, if you're in that position, then go ahead and message me and let's see if I can help you or not. You might be too far gone. You might as well just get a CD account, take up like knitting or pickleball and, just kind of like try to stretch that Social Security, right? But if you want to grow it and grow it like a boss, then message me, right? DM me and then we can talk, okay? So I'll look at I don't have a ton, right? And when I do a forensic analysis of people's losses, usually there's one common error. And I say, look, if you are buying at the top and selling at the bottom. If you just reverse that, then what are you looking at that makes you want to buy, right? Or makes you want to sell? You start asking yourself these questions. Why did I do this? And and why didn't I make the change? Why did I, so we can go back to the dollar yen, and that was September 18th, 2010. So I'm going to go down to like a 5-minute chart, and then we're going to do a little forensic analysis of my big. I have a lot of gains, but people, you lost $10,000. Yeah, it makes $76,000 too. But and people are just like that, I remember one of my mentors said, he took the family savings. He had $50,000. His wife was saving up, and then he lost it, and he never heard the last of it. But then he got some more money. He traded up. He made $300,000, and he gave back that $50,000 back to his wife. And his wife never spent that $50,000. It was so shocking and so, it was like someone dying in the family, losing 50,000, right? That even though now he's making like a couple of $1,000,000 a year, that 50,000 that he took out of the home, the home account, that was so traumatic that she doesn't want to do anything with that money. Even though they have more money, that 50,000 that was lost, there was such an emotional attachment to it. And so you don't have that kind of attachment. You got to understand that money is energy, like the air you breathe, right? I got to hold my breath because you might run out of air. That's ridiculous, right? So you have to get to a mindset where money is not is an energy. It's like the air you breathe. It's all around you, and you receive it. It comes in, it comes out, it circulates, right? So that was going back to our chart. 918. I'm going to mark it. Oh, I don't lose my place. especially when I start talking. 9:18 and looking at 20s. That's like 8 o'clock. I trade Asia session. I don't like getting up this early in the morning. But I do it for you guys. If you have a question, post it in the chat box. We still got a couple of minutes left, the 15 minutes left. And if you found this helpful, give me a thumbs up, a like, a share in whatever media you're watching me on. If you're watching on Facebook, repost the link and share it with someone. If you are on YouTube, give me that thumbs up, a like, a comment. Tell me what you've learned, right? And it's not for my ego. Oh, wow, they like me. No, it's actually for you, because after I'm dropping some bombs here, I'm dropping some bars, some serious information here, right? And you're going to say, oh, wow, this is great information. But unless you do something with it within an hour, you will forget 90% of what I just told you, right? I can lay out the whole Pip and Run system for you out right now, and you would completely forget it in an hour unless you did something with it, unless you placed a trade with it, unless you wrote it down or did something where you tell your subconscious mind, hey, this piece of information is important. Why? Because he did something with it. But if you don't do anything with it, use it. You heard the term use it or lose it, right? Use it or lose it. So you lose it, and then you hear it again. Wow, this is great information. This is great. You say it's great, but you don't do anything with it. Your brain goes, oh, you didn't use it. You like this information, but you didn't do anything with it. Delete, 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 right? And so you keep going to the same classes, the same workshops, the same webinars, the same videos over and over again. Because why? You're not doing anything with the data. And with my students, what I'm doing with them is I'm giving them homework. They had homework. And I said, look, you are going to do a wave count. You're going to project what price is going to do. You're going to take your trade because your analysis is going to make you money, right? And I told them to do it in a demo account. But I said, you know what? This is where the rubber meets the road. Your analysis is going to determine where you were going to be as a trader. So Steve goes, hey, I'm looking at 15-minute chart dollar yen, and this thing is going to go to Pluto. And I'm like going, it's a chart. I'm like, going, bro, right? So he's my student showing me his chart and telling me where it's going to go, right? And I put any of my Pip and Run students against any analyst in Wall Street. In fact, I've had some that worked for Fisher Investments. They're like, where'd you learn this? Oh, Elite Traders University. I've never heard that. Is that a real university? It's like, this guy passed the Fisher Investments test when he was and was wind up sending him to London. And they go, how did you know all this information? So I work for the largest forex broker dealer in the world. So I learned a few things, right? So this is where let me see if I can actually even show it, right? That's where it is, I think. Execution marks. Yep, there it is. Whoop, there it is, right? So this is where I stacked it too, right? I was looking at this as a counter, a bear flag, right? And I know my entry strategy is right there. Trend line break, color change, short, right? And but I got filled, yeah. Yeah, okay, right here, right? So yeah, I went heavy, short, and then bam, got hit by this long, right? There's this total fast reverse. It's a 5-minute chart, right? So you go drop down to 47.89, where I could have got out, and then I was looking for a push down to 47.87. I was like, it's all coming back to me now, right? I was looking for in fact, I was looking for a retest of the low, right? So I was looking at this as a wave 4 consolidation, and then drop, and then it boom blew up, and then but what happened? This was my I got short liquidity operation, and then boom, Oh, it did it blow the low out? Yeah, it did blow it. Blew out that 80 level, blew all that out, blew all that out. Boom, right? Yeah, really. So I was so even this was corrective, but it went a little higher than my right. Trying to get a hold of this line here. You're right, right. And so if I held it right, we had like a head and shoulders, a break below the trend line. So my initial move was correct. But what happened was I went back, got long. I just kept taking longs, taking longs, taking longs, and then I just got out. I stopped. And I'm glad I stopped taking longs. I was taking some longs, right? I was taking these longs, but these things are counter trend, right? And then and then I mean we do 2 hours, right? 2 hours of time, right? And then I stopped. I'm glad I stopped because it's too. We start at 7, we end at 9, and here is 10 o'clock Eastern time, right? Now, if I was up for that, it was a lot, but you gotta get some sleep, right? Can't trade everything, but that's where the meat came, right? Uh, Now, if I had left it, maybe put a bigger stop loss, where would have been my stop? Because I got short on the break. I don't think my stop was pretty tight. Yeah, it was like 20. That's 20 pips, right? I need like a 25 pip stop, and I don't do those. I try not to, right? So yeah. So anyway, that's so I analyzed that loss. All right. Just look at your chart, look at the loss, and then see what happened. And really, that that short, I mean, that was massive. I mean, if I had held it through that, but you only can trade what you see. And I didn't see any of this, right? We saw this, right? And I was looking for a break. I thought this candle was going to break down, and it didn't, right? So this is where my short term direction was off. My long term one was right, but I wasn't gonna stay up for all this, right? I wasn't gonna hold it over. I mean, overnight for me. I'm sleeping here, right? And but the prognosis was correct. The timing, remember, it's all about timing, and the timing was off, and because so it was wrong because the timing was wrong, but it wasn't wrong because it was a stupid trade. It was just like too early, right? Um, but we still made up for it, right? Because if the timing to go short was not right, the longs were still in play, and that's why I did. I took those longs, and I stacked heavy on those longs too, right? So hey, I hope this was extremely helpful. And again, I've been doing this for 30 years. There's not a market that I have not seen, and I work for one of the largest forex broker dealers in the world. I work for a top tier bank. I worked for an Australian brokerage. I've uh, helped brokerages get established by showing people what can be done with trading. And so, if you are interested in learning from me for the time being, because I'm building a trading team here at Elite Traders University. We're looking for 1,000 traders. We've probably got over. We're close to that number right now. And then after that, we're probably going to close our doors and just focusing on money management, getting certification, licensing, and we have some very powerful AI bots and things that we're doing that our ETU or Elite Traders University alumni are going to have access to excellent AI technology based on what's in my head, right? Having that trading 24 hours a day, 7 days a week. So, and that will not be available to the general public. It will only be available to our students or graduates and current students of Elite Traders University. And then we're going to close our doors because it's, it's been a nice run. It's been a nice 10-year run. But the beach is calling. and I'm going to have some talented traders, and we have some great systems in place. So if you want to get the last remaining seats here at Elite Traders University to trade, learn how to trade the old-fashioned way from a human being, then go ahead and message me. So I look forward to hearing from you, and thank you for watching. I wish you a great weekend, and I'm going to get some water. My throat's getting a little froggy there, and you guys have a great rest of your weekend. Peace and pips. Dr. Greg, signing out.